Welcome to Talk Tickers. Today we're diving into Bristol Myers Squibb's fourth quarter earnings call. For months, the big question hanging over BMY has been pretty simple. Can their new drugs actually grow fast enough to outrun the old ones? Well, this quarter just gave us our clearest answer yet, so let's dive right in. The CEO, Chris Borner, he kicked things off with this idea of good momentum. And look, in an industry that is obsessed with patent cliffs and all the headwinds, right? Hearing that kind of forward-looking confidence, it's a huge signal. It basically tells you the company thinks they're finally turning a corner. And really, this is the central drama for Bristol Myers, isn't it? It's a race against time, a classic story. You've got the new growth portfolio on one side, and on the other, you've got the inevitable decline of legacy drugs as they fall off that patent cliff. The big question is always, which one wins? Well, this quarter's results, they gave us a really, really clear answer. All right, so what's the big headline here? The main takeaway? Honestly, it was a better-than-feared quarter. I mean, the market was totally braced for some serious headwinds, but BMY, they delivered. Not just on the results, but, and this is crucial, on their 2026 guidance, which actually came in ahead of what everyone was expecting. Okay, first up, let's talk about the number that really got people's attention. Non-GAAP earnings per share. It came in at $1.26. Now, why does that matter? Well, it's a huge measure of profitability, and it's one that every single analyst is watching like a hawk. And they beat on it. And that profitability, it was built on a really solid top line. We're talking $12.5 billion in revenue for the quarter. Now, you might look at a 1% gain year over year and think, that's not much. But you have to remember the context here. With all those headwinds from their old drugs declining, holding that line, let alone growing it, is actually pretty significant. So let's put it all together. Here's how those numbers actually stacked up against what the street was expecting. You can see it right there, a beat on adjusted EPS and a beat on revenue. They came in comfortably above consensus on both. And let me tell you, it's that clean beat on both the top and the bottom line that really started to change the whole story around this stock. All right, now let's get to the real core of the story here, because it's really a tale of two different portfolios living inside one company. And this, folks, is where all the action was this quarter. And boom, here it is. This is that turning point visualized for you. Just look at this. The new growth portfolio, that's the one powered by heavy hitters like Opdivo and Eliquis, it surged an incredible 16%. Meanwhile, the legacy portfolio did what we expected. It declined by 15%. But here's the crucial math, the thing everyone was waiting for. The growth is now officially, finally, outpacing the decline. That's the whole ballgame. So what does that mean for the business as a whole? Well, the impact is massive. That growth engine we were just talking about, it now makes up nearly 60% of Bristol Myers' total revenue. Think about that for a second. This isn't just a side project anymore. This shows the transition is actually working. The new portfolio is the core of the company now. Okay, so with a really strong quarter in the books, what did management do? They immediately pivoted to the future. They're already positioning 2026 as this absolutely pivotal year, and it's all because their pipeline is just packed with potential game changers. And look, they didn't just talk the talk. They backed up all that optimism with some really strong guidance. For 2026, they're forecasting revenue somewhere between $46 and $47.5 billion. And for EPS, they're looking at a range of $6.05 to $6.35. The key here is that by setting those targets above what analysts were expecting, they gave investors a real, tangible reason to feel confident. Now, management kept using this phrase, a data-rich period, for the second half of 2026. And when you look at the timeline, you can totally see why. We're talking major top-line data from milvexian, that's their next-gen blood thinner. We're going to get key readouts for new cancer drugs like iberdomide and mezigdomide, plus a whole bunch of important data in immunology. This right here, this is the catalyst path. This is what every investor is going to be watching for the next year. So we've got a solid beat and some really strong guidance. The big question is, how did the market react? How did investors take all this news? Well, the verdict from the market was immediate, and it was crystal clear. They loved it. The stock closed up over 3% on the day. Now, for a huge company like this, a big pharma name, that's a pretty significant move. It's a solid vote of confidence, no doubt about it. But it wasn't just about the price. You have to look at the volume, the number of shares that traded. We saw nearly 24 million shares change hands that day. I mean, that just blows its 50-day average of about 14.5 million out of the water. So this wasn't some quiet little drift higher. No, this was a big move driven by high conviction and a massive spike in investor interest. Okay, so we've covered the results, we've looked at the guidance, and we've seen how the market reacted. That brings us to our final section, what we call the next call. So the big question is, what's our call on BMY? When we put all these pieces together, what do we think is going to happen between now and the next time they report? Where is this story, and more importantly, the stock, headed from here? All right, here's our call. We've got 3 key predictions for you. First, we expect the next quarter's results to track toward the high end of their guided range. That growth portfolio momentum is just firing on all cylinders, and we don't see that stopping. Second, for the price action, we think the stock is going to challenge its 52-week highs. Why? Because the market is going to start pricing in all that good news from the catalyst path in the second half of the year. And third, and this is the big one, the narrative. We believe the market is going to fully pivot. The fear of that legacy patent cliff, that's going to be in the rearview mirror. Instead, people are going to start valuing the durability and the real long-term potential of these new growth assets. So bottom line, based on their strong execution, that better-than-feared guidance, and the really clear catalyst path they've laid out, our official reading on Bristol Myers Squibb is outperform. This is not financial advice.